What is going on, everyone? Welcome back to the channel. Today we need to talk about a major sell-off in cybersecurity stocks, including CrowdStrike, Zscaler, and SentinelOne. All three dropped sharply today. And the reason behind it is actually pretty surprising, involving a major AI leak that could reshape the entire industry. So in this video, we will break down what happened today, why these stocks dropped so hard, how they have performed over time, what their valuations look like, what analysts are saying, and most importantly, whether you should buy, hold, or sell. Let's dive in. First, let's look at what happened today, March 27th, 2026. It was a brutal day across the cybersecurity sector, with declines extending through after-hours trading. As of the close of after-hours trading today, CrowdStrike fell 6.2%, closing near $368. Zscaler dropped 6.8%, ending around $132. SentinelOne declined 6.4% to about $12.60. This was not company-specific news. This was a sector-wide sell-off. So what triggered it? The main catalyst was a leak from an AI startup called Anthropic. A draft blog post accidentally revealed details about a next-generation AI model called Claude Mythos. And this is what spooked investors. The model reportedly has advanced cyber capabilities. It can identify and exploit vulnerabilities at machine speed. Essentially, it could automate cybersecurity itself. Now think about that. Companies like CrowdStrike and Zscaler make money by selling high-margin security software. But if AI can detect threats instantly, patch vulnerabilities automatically, and even simulate attacks, then investors start asking a very important question. What if cybersecurity becomes commoditized? This led to a repricing of risk across the entire sector. It is not that these companies are suddenly broken, but their long-term competitive advantage is now being questioned. Now let's zoom out and look at performance over time. Starting with CrowdStrike, the stock is down about 18% year-to-date. It has been under pressure due to very high expectations, especially with its long-term goal of reaching $20 billion in annual recurring revenue. But over the past 5 years, a $1,000 investment would still be worth over $2,100. So this is still a long-term winner, just facing short-term pressure. Next, Zscaler. The stock has dropped nearly 46% in just the last 6 months. Despite that, its recent earnings were strong, with revenue growing 26% year-over-year to $816 million. Long-term, the stock peaked near $369 in 2021 and has delivered about a 37% total return over 3 years. So, fundamentally solid, but sentiment has been very volatile. Now, SentinelOne. The stock is down about 7.3% year-to-date. It recently crossed $1 billion in annual revenue, which is a major milestone. However, it is still trading about 81% below its 2021 peak. That tells you the market still has serious concerns about profitability and execution. Now let's talk about valuation. CrowdStrike is trading at about 18.1 times forward price to sales. Zscaler is at about 7.7 times trailing price to sales. SentinelOne is around 4.7 times price to sales. So what does this mean? CrowdStrike is still priced as a premium leader. Zscaler has seen significant valuation compression. SentinelOne looks cheaper, but also comes with higher risk. This is a good reminder that a lower valuation does not always mean a better investment. Now let's look at what analysts are saying. CrowdStrike has an average price target around $490, with some estimates going as high as $600. Zscaler has a consensus target around $268. SentinelOne has a median target around $19.23, with some bullish estimates reaching $30. Overall, analysts are mostly maintaining hold to moderate by ratings. This suggests they still believe in the long-term story, but are cautious in the near term. Now, let's talk about my recommendations. For CrowdStrike, I would rate it as a hold or a buy on dips. It has best-in-class execution and strong customer retention, but evaluation is still relatively high. If the stock pulls back further, it becomes much more attractive. For Zscaler, I would consider a buy, but with higher risk. The company still has strong growth, and a lot of bad news may already be priced in. If AI concerns fade, this stock could rebound significantly. For SentinelOne, I would call a speculative buy or a hold. It has the lowest valuation among the three, but also the most uncertainty around profitability. This is more of a turnaround or high-risk growth play. Before you invest, here are the key risks you need to keep in mind. First, AI disruption. If advanced AI models truly become better at cybersecurity tasks, it could fundamentally change how this industry operates. Second, slowing growth. For example, CrowdStrike's revenue growth has slowed from over 35% to around 21%. That matters a lot for high valuation stocks. Third, competition, especially for SentinelOne, which still needs to prove it can balance growth and profitability. So overall, today's sell-off was not about earnings. It was about fear of the future. And in the market, fear can create opportunities, but only if you understand the risks. Let me know in the comments, are you buying a dip in cybersecurity stocks or staying on the sidelines? If you found this helpful, make sure to like and subscribe, and I will see you in the next video.